Good evening, ladies and gentlemen, and a very warm welcome to the panelists. Gentlemen, if 1 year ago we were sitting here at the same table and we were talking about globalization, about prosperity and growth, do you think we would be talking about the problems of free trade? Do you think we would be talking about the problems of protectionism, of growing nationalist sentiment? We certainly wouldn't. We would take all these things for granted. We would probably be wondering, protectionism, what is that? So 19th century, isn't it? Free trade, I mean, that's given. That's what we are going to get into now. That's the future. Unfortunately, all this has changed. And what a change it has been in the last 6 months, last 6 to 8 months. Without much ado, and my colleague Sandeep has already given a brief about the new abnormal, may I venture into debating and discussing what really is happening in the world today? Is it growing protectionism? Is that what we are going to get used to? Are we going to get used to more barriers, trade wars maybe, WTO disputes? May I ask Rick Lesser? Rick, you've been meeting with a lot of global CEOs. You know what's happening in America. You probably are also very familiar with what's happening in what may happen to President Trump's policies, given what we saw a couple of days ago. So can I just ask you, are we looking at more trade wars? Are we looking at more protectionism? Or is it all just smoke and mirrors?
I think the first thing we're looking at right now is a world of much more uncertainty. And if I just step back for a second, because we'll get to the challenges of trade, I think the last decade, I was sitting here in the first row, and I was thinking about the last time I was in this exact room, and it was 10 years ago, and we were at a worldwide BCG partner meeting here. I think our India team at that point was a little over 100 people. Now it's over 1,000 people. But we were talking about the world, and I was thinking about what's happened in the 10 years since then. And we've seen risk change fundamentally on 4 dimensions over that decade. We've seen risk in a macroeconomic sense, obviously, with what happened in the great financial crisis less than a year later. We've seen it in cybersecurity and the uncertainties we feel that is at a different level for most companies and individuals. We've seen it in pandemics and the health risks that exist today from superbugs and other things that we need to consider in ways we didn't before. And to your last point, we see it in a geopolitical environment that feels much less stable and much more uncertain than it did before. And it's easy to step back. I want to get to the opportunities in a second because it's easy to miss that. But it's easy to sort of look at this in a short-term environment and just pick on one issue or another. But I think fundamentally we have to deal as CEOs in a different risk framework than the risk framework we dealt with, not so many years ago. I think right now, I don't think it's destiny at all that we'll end up in a protectionist environment. I think the administration, I happened to hear Secretary Ross, the new Commerce Secretary, speak about 10 days ago, specifically talking about this issue, is from the United States' point of view, the new administration, President Trump, I think is clear through several of his leaders, Secretary Mnuchin, Secretary Ross, have talked about wanting to expand trade and to continue to evolve trade, but to do it on a different basis. They perceive that the basis that the United States has negotiated on in the past, when the world was at a different place, wasn't balanced, and they want to get to balanced trade. But in order to get there, they believe they need to have a bit of a stick as well as a carrot, and the stick is if they can't get there, they're prepared to take more aggressive action. But I don't think that's the intent or the desire to end up in that place, and I think their hope is by willingness to be clear up front that they're going to take a tough view on trade, that they hope that that will lead to negotiations that can avoid that and get to a world that improves trade.
Right. They want to expand trade. David, if I could come to you on this. Brexit hit Britain. He's talking about free trade. Donald Trump is also talking about free trade, though he's saying fair trade. And as Rick said, there's a stick along with the carrot, and they will really want to expand trade. Is that what we are actually going to get into now? Despite all this talk and all this bluster probably and all this propaganda about border tax and we won't let you in and you go back to your country, it's going to be the same again. What do you think?
Good afternoon, ladies and gentlemen. I'm delighted to be here. I think we have to pause for a minute. We have had some shocks in the last year which have definitely challenged globalization and challenged free trade. But if we look back over the last 20 years, we've had huge benefits from globalization and free trade, and the estimates are many, many hundreds of millions of people around the world lifted out of poverty. Some say as much as 1.5 billion. On the other side, we've had products, innovation, services, food delivered to billions of people around the world at a much lower cost and with much greater satisfaction relative to income levels than we've ever had in the past. So a lot of that we take for granted, but I think we need to sort of pinch ourselves and remind ourselves of the huge benefits that free trade and globalization has brought. Now, maybe getting closer to your question, technology has rolled on very fast. The Internet of Things, that's all enabled free trade, but it has meant that some people have felt left behind. Now, there's two options on that. One, you say, well, let's stop technology. Let's stop the development of the Internet. Let's stop product innovation, robotics, and so on. But, you know, we've tried that through the centuries. It's a bad thing. It lessens the benefits for mankind. But right back to the Industrial Revolution in Europe, we tried that. It didn't work. So that's not an option. The second option is probably for everybody to think hard about those who have been left behind by technological advance. And I think that is a challenge for governments and for the corporate sector to stand in and fill some of that gap and to reskill. And there's some great examples of that around the world. I would like to see us do more to look at those examples. That was part of the issue in Brexit. I'm not going to give a speech now because it would take hours. There were many, many competing factors in Brexit, but part of it was people feeling left behind and communities where jobs had been lost and people hadn't been reskilled. And I think we should take that challenge to see what we should do about it.
So a little bit of a redoing, restructuring of free trade agreements and how global trade politics has worked. Let me give you an example. Andrew Liveris, the CEO of Dow Chemical, made a statement a couple of days ago where he said that whatever has been happening in the last 3 or 4 decades, we've gone too far on one side. And we now have to come back and we have to take stock. Professor Feldstein, if I can ask you, and if I can probably, you've written extensively about Donald Trump's trade policies, and you have also commented on it, and perhaps more than anybody else, you know the mind of the man, so to say. What do you think, sir, is really going to happen? Is there going to be a greater push towards liberalization and globalization, but in a different form?
So my sense is that there's still debate within the senior parts of the Trump administration, but I think in the end, we're not going to move to closing markets. We're not going to move to trying to destroy globalization. I think that there is a desire to open markets, to increase our U.S. exports to other countries. The business community is very much behind the globalization process. We see it not just in terms of what we import and what we export, but the fact that there are global links in the production process. So components are imported, the products into which they're embodied are re-exported, and we can't bring that to a halt. And I think that's why, as we move forward, we're going to see a strengthening of that process rather than a destruction of it.
A strengthening of the process and rather not a destruction of the process. Mr. Anil Agarwal, if I could come to you, sir, and more than anybody else, Mr. Anil Agarwal probably represents the spirit of globalization, given what he has done in the last couple of weeks. Maybe, sir, along with whatever you're commenting here, you could tell us a little bit about your bid for Anglo-American. But on a more serious note, do you think the whole issue about globalization has been, done too aggressively, and the rhetoric has gone to another extreme, and now we just need to kind of come back, pull back, take a deep breath, calm down, and look at issues as they are? What do you have to say, sir?
I'm very pleased to be here. It's a pleasure. I've been living for at least 1.5 decades in the UK, and from there I raised a lot of funds to bring it to India, invested almost $30 billion in this country. My India is a very different situation. According to me, is a different orbit. If you look at the opportunity, if you look at the whole world, 1.3 billion people in China, 1.3 billion people in India, 1.3 billion people in Africa. What left? This is the continent 3 is going to grow. And the other part, which you talk about globalization, is to service this continent. So I am very focused on natural resource, which is a very global, very, very important. As far as India is concerned, India import 85% of oil, most of the gold, most of the silver, fertilizer, copper, almost $500 billion import. Today's technology, India, if you compare with the China, we have almost have a production with the same geology, 1/10 of production. 1/10 of the production what China produce. It is a tremendous opportunity for the anywhere in the world. When I'm sitting the overseas, I realize the opportunity with this government, with this position. People are sitting on the fence till the last year. This year they all are here to invest money into India. So I'm very focused looking at 3 parts. One is infrastructure. I heard our infrastructure minister talk about almost couple of $1 trillion to be invested into the infrastructure. That will change the country and bring tremendous opportunity for the entrepreneur. Number 2, natural resource. We have pool of hydrocarbon, we have pool of natural resource. On the base of that, the startup, the SMEs, thousands of SMEs. Today, if you take up the automobile, one car will need almost 600 kilo of aluminum, and which will require at least 200 industry to build those parts. And tremendous opportunity to build this startup, build this SMEs. So one part is definitely, as we talk about infrastructure. Number 2, we talk about natural resource. And number 3, we talk about startup and SMEs. Also, the fundamental what we are looking is, what you're talking about globalization, what Mr. Modi is talking about, $2 trillion to $20 trillion. Who will do it? This is the country where the global partnership, this is the place for the partnership. This is the country which require a partnership. And this is what will happen in India. That's what I call about the globalization.
Thank you, Mr. Agarwal. You're really talking about the animal spirits of businessmen and the entrepreneurship and the investment that they can do. Mr. Rana Kapoor, if I could come to you, sir. Forget about global trade wars and what's happening in Europe and what Mr. Trump is trying to do. Indian businessmen should invest and keep investing so that you meet the unmet demand in this country. Is that what you think is likely to happen? And is that what you're seeing also in the marketplace?
Sriram, thank you very much. But before I start my comment, I have to tell that Anil Agarwal, who's my friend for the last 30 years, did not make his most important point. His most important point is that India's wealth is more below the ground than above the ground. Am I right? But moving on to your mainstream question, Sriram, all I can tell you is that the global ideologies, I think that's the mainstream question.
Right.
And it's been addressed by global leaders, with brilliant credentials that you've been able to mobilize, that the ideologies are changing. When the ideologies change, there is an underlying economic revolution. You have to understand what happens. The tectonic plates of the global economy change. What does that mean? It means to me what is happening is that the MNCs are taking a little bit of a rest. The new age MNCs, what we call mega scale MNCs, are taking a head start. And then the more micro, small, medium MSCs are also working in the right direction. So the fact of the matter is that there is a tectonic shift happening in the economy. global economy, but what underlines that tectonic shift, which you cannot, through protectionism and through home country economics, you can't change, are two things. Consumption. Number one, consumption, and I'll give you data points. The consumption out of 4.2 billion population on a base of 7.9 billion in the world is happening largely in 36% of the economy, which is the emerging economies. The MNC slowdown has been so drastic. It's last FDI investments and their overall investments in emerging economies and their market share has been receding. And home country companies, whether it's with the life sciences genius like Ajay Piramal, whether it's a metals genius like Anil Agarwal on this dais, and many others on this, on the stage, the fact of the matter is that the tectonic plates of the economy are changing more into home country economies. So what is relevant today is interconnectedness that you can't change. You cannot change because the consumption is happening in other countries and the supply is in other countries. So you have no choice but to interconnect.
You have no choice but to interconnect, so that means more trade and more investment in probably emerging economies. One man who actually knows how to take the battle to MNCs, Mr. Ajay Piramal. Mr. Piramal, we've seen the private capex investment figures, which comes out every quarter, and the latest figures are not looking very good. There is a problem in corporate India when it comes to big ticket investment. The small investments keep happening. How do you think this problem can be addressed, sir? And how soon can it be addressed?
I think when we look at the problems of investment, we must appreciate that in the previous years, I think from 2008 to for the next 4 or 5 years, we put up a lot of investment which actually has turned unproductive. So if you look at the investments that were done, let's say in the power sector and all, most of them have not even been fructified. And this overhang is creating a big issue with banks. I think Rana in his address also spoke about it. And unless we solve the problem of the non-performing assets, I see that we are in for some big issue. And just to make a point, if you look at it, the share of the public sector banks actually is going down. They are showing negative growth rates, whilst all the private sector banks are in a very happy position. So I think we need to solve that. The second thing is, of course, that government investment or the public sector investment is going up. I think more has to be done because people have been, most of the people who did the large projects in the past have been bitten so badly that there's a lack of confidence. I think that confidence needs to come back. And that is a challenge, and we need to actually deal with that.
Unproductive assets have to be put to productive use, and that's something that we've been hearing from everybody for the last 3 years. Do you think enough is being done to make this happen? I'll ask you this first, and then Mr. Rana Kapoor can take it later.
So they are doing a lot as far as the Bankruptcy Act is concerned, but I don't think enough is being done. Frankly, in my view, for the Bankruptcy Code to really start working, I've seen this in the last 9 months, not much has happened. To my knowledge, not a single resolution has taken place. I think we need to be a little more, I think this needs more attention. We'll need to accept certain things and we'll have to move along. Because otherwise we are just getting, I don't see bankers doing anything else other than worrying about these things. So productive banking is not taking place, and that is a big concern.
Productive banking is not taking place. Mr. Kapoor, just before you answer.
In the public
I'll add
sector.
only one comment to what Ajay said. Ajay said, India has become a country of credit warriors. And this is the term that doesn't belong to me. It belongs to the #1 investor in the world on the debt side, the founder of Oaktree, and a guy I admire like fantastically. I had breakfast with him 3 weeks ago in Bombay, Howard Marks. Genius, right? But India needs not credit warriors, India needs credit warriors. We need to fight the credit battle.
That's a very good
To
term.
me, this is what Ajay is alluding to, and he said it very nicely. that we have to solve the problems of the past to really galvanize the future, something like that.
But when you talk about credit warriors, you mentioned in your speech about public sector banks and how they need to be brought up because there is a social dimension to the whole thing. You think the government is doing enough to revive the public sector banks? You think enough capital is being pumped in? Because that's really the key issue, isn't it?
I think the government has created the tailwinds. So the government's job is to create the tailwinds, and the leadership in the banks has to perform. And has to perform with regulatory support, which in my assessment and my judgment is adequate today. So we have to take the bull by the horns and solve the problems, and we have to create stress asset, special situations management. And to me, therefore, as I said very fleetingly in my comments earlier, that India is the most beautiful buy versus build market in the world. We can solve India's problem in less than 18 to 24 months. Thank you.
Mr. Kapoor, you're giving a lot of very good quotes today, but I see Mr. Piramal shaking his head vigorously. Maybe you would want to comment, sir.
I don't think it's a question of more capital being put in public sector banks. That's going to be washed away in a few months. If we recognize the challenge of the NPAs, which is like 200 billion, people say, if you don't solve that, as much capital as you put, it's going to be washed away. And it's not, I'm not saying it, the market recognizes it. Look at the market capitalization of an HDFC bank. I mean, that is like 300,000 crores. The State Bank is virtually half of that, when its book size is 6-7 times more. Why is it? I mean, so we need to look at that. Or why is a Deutsche Bank, why take only Indian names? Why is a Kotak probably more valued than a Deutsche Bank? There is something which... So we need to, so obviously the market knows things which are not being, we're just hiding behind the curtain.
Hiding behind the curtain, that's a very good point. Let me just turn now to a very different topic, and I could start with Professor Feldstein here. Sir, do you think the global economy today is on the cusp of probably turning around or doing better? We've seen commodity prices stabilizing. We've seen little better growth happening in US, maybe Japan. Are we likely to see a time where global growth, because that's important for a lot of countries, including India, if global growth really perks up?
Let me give you the short answer, yes. But I want to make two other points, and then if you want, I'll come back and expand on that. India, I think, is clearly a nation of entrepreneurs. But an entrepreneurship is what can drive the Indian economy and the standard of living in the country. But for that, it needs a viable financial structure. It needs banks that are in a position to lend. And given the dominant role of the state banks, they have to be brought back to health so that they can participate in the entrepreneurial activities. The second positive point I want to make is about China. I was in China last week, talked to a number of executives, not just Chinese, but American and other non-Chinese, and a common theme was wages are rising very fast here. China is becoming non-competitive. We can't continue to produce here. Well, what's the best alternative? What should clearly be the best alternative for them is India. India should be involved in the supply chain activities that are now happening in China. But to be in the supply chain activities requires not just finance, not just a willingness to do it, but also importing the components, importing the machinery, importing the things that you need to be part of that supply chain. So there's a great opportunity that now faces India in dealing with the fact that China is becoming, for many, many activities, is becoming less competitive.
Right. David, if I could ask you to, add to Professor Feldstein's point, India is really the bright spot in the global economy, despite the short-term speed bump that we saw in the form of demonetization, given what's happening in China and other places.
I mean, we've seen quite a lot of positive indicators coming out over the last week or so. So, one measure from China, rate of electricity consumption by industry, gone up. Singapore exports, small place, but an awful lot of trade goes through Singapore, have gone up. There's a business confidence index in Germany published this week, which is at a 3-year high, despite all of the challenges in Europe. And there are many, many other indicators. So I think the world economy is looking fairly good at the moment. How do you reconcile that to all the uncertainties we've talked about, the geopolitical uncertainties, the rise of populism, cyber challenges, technology changes, digitization? I think businesses since 2008 have got better used to dealing with uncertainty. They've got better at doing planning around uncertainty, scenario planning, getting their businesses agile and fit. They're facing unprecedented rates of change. But I think they're used to dealing with change now, and I think after the shock for many companies, certainly in Western Europe and North America, after 2008, I don't think the geopolitics and the other uncertainties scares them quite as much. Of course, they're worried as citizens of their countries, but I think they now feel they've got to get on with things, which I think partly explains some of the confidence measures that are around at the moment.
Right. Mr. Kapoor and then Rick.
I think a point was made, and I'll take a quick response on this, that India must not enter the space that China is vacating. I think the point was made that we should go for low end. So China is upgrading, and we should not enter that space. I'll tell you why. Because India is already a 67% service economy. We are a 13.5%, 14% agri economy, and give or take 14-15% manufacturing economy. Our opportunity is actually to really build jobs, high-end jobs in creative industries. Not make in India as in like bottom end, but to create in India and make in India and design in India and innovate in India and create that entrepreneurship in India. To me, that is where India's future is. It's not to take over China's space.
Not to take over China's place, Rick?
So yes, I'd like to build on this. I'm moderately optimistic about the global economy. I'm really quite optimistic about things here. I think there's 3 broad trends underway that I think India is sort of at the convergence of. One is the strength of the emerging markets over decades as the main driver of growth in the world. And as David said, over 1 billion people coming out of poverty over the last couple decades with a tremendous amount of opportunity, unmet demand, ways to improve people's lives in the years ahead. Second, the nature of globalization is changing. I thought the story that Lee Jun told us was fantastic, where, even a decade ago or 5 years ago, we'd have expected a company like Xiaomi that was globalizing to globalize by taking the products that it manufactured in China and just shipping those products somewhere else. Right. In today's world, given the changing economics of manufacturing and all that's happening in Industry 4.0, there's an opportunity to bring production much closer to the point of demand and to really rethink supply chains and really change the nature of the ways businesses operate a global network. In India, with 1.3 billion consumers, it just has a tremendous opportunity to take advantage of that in terms of that. And then finally, the digital revolution that's underway has the opportunity to not just emulate what's been done in developed markets, but to leapfrog in the kinds of services that are provided in health, in education, in banking. And so you put and India, because of the investments it's made in its infrastructure, the education of its people, has a real chance to be at the center of that. So you put the emerging market strength, the shifting nature of globalization and the localization of it from a production point of view, and the digital revolution that's underway. I think India has an enormous opportunity to take advantage of that and will in the years ahead.
India has an enormous opportunity. Mr. Agarwal, you've been a big India bull for a long time. You would like to add something to that? I said you've been a big India bull.
I've been bullish. First of all, I want to talk, just clarify, Ajay. When you build the country, these episode has to come. Where the bad loan, we have built 200,000 megawatt of power. In this process, if 20-30,000 megawatt power has happened everywhere. You cannot hold a gun. You have to hold a machine gun. You cannot count bullets when you are building a nation. So this is the department will deal with. The law will take its own course to deal with, but for that we cannot hold our development. This phenomena will go on. The opportunity, I sell the metal, I sell the natural resource. Everywhere in the world, everybody is looking to sell metal or the product in China. We are the only people who sell in India. We don't have to go anywhere. Whatever you produce, we have seen 10% growth year after year. We have seen when we go outside, people are nervous, people are depressed, people are thinking their job will go away tomorrow. I never see that kind of depression in India. No matter what happened, the enthusiasm, the positiveness, that's what counts. The cost, if you see the cost, where will you find this kind of cost, what you have in India? What I said is important, bureaucracy. What I am looking at, self-certification. Trust our entrepreneur. What they have not built and given you when you have trusted them. Telecom company, roads, airport, world-class port. We have Mr. Adani sitting here. What kind of port he has created? Once you entrust our entrepreneur here, they will build. In this process of bankruptcy, this is the process. So I'm very, very optimistic of India. I'm appealing everybody, be positive. What opportunity you have, you will not find anywhere in the world.
I'm afraid we are running completely out of time, but Mr. Piramal, a quick response to that?
So I said that we have to solve the problem of bankruptcy. I did not say that it is there. If we don't solve it, just look at what's happening to the banks. You can't grow in India unless public sector banks fund it. And where is the funding? Actually, the share of public sector banks in the last few months, I mean, you see, they are minus 13% growth in advances. It's people like Rana and all who are taking advantage, which is good, but you can't have the public sector die. And how will, I mean, you need funding. That's what I meant. And there's also some moral issues on bankruptcy. I must say it since I'm now have to say it. You know, when I have seen, we are also in this space, I see there are companies which have 50,000 crores loans. And I can see that how can you write off 50,000 crore loans of one individual company when you have hundreds of thousands of farmers? If somebody says you write off 5,000 crores, there's an uproar and it's financial indiscipline. I think this has to correct.
This has to get done. Thank you, ladies and gentlemen. It's been a most enjoyable discussion with such eminent people out here. I'd just like to close with one closing remark. Nate Silver, whom we all know and whom we all read, said some time back that I think people have to get comfortable about the fact that there is probability in life and there is uncertainty in life. The only thing I don't know is whether he said it before November 8th or after November 8th. But, you know, given looking at what the panel has been discussing, there probably is less uncertainty and more optimism. And thank you panelists, and thank you audience, and please enjoy the rest of your evening.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.